think to start now. Yeah, good morning, everyone. I'm your MC today. Let me introduce myself. I'm Cindy Yeo, the Tax Director from AdrianYeo PLT. Today's our topic is tax, SME financing, and credit rating services. So after this seminar, I believe we do hope that you can grab the ideas of how credit decisions are made by the bankers and how to increase of your odds in getting of your loans. So before you apply the loan, so normally the banker will ask you, hey, can you give me a copy of your income tax return? So if you answer if yes, congratulations to you. Yeah, so with the income tax return, then you can apply your loan. But the next question is, have you declared full of your income tax? Yeah, of your income, or you under declare of your tax. So that's why the income tax payment always interrelated to the bank loan application. And then the third speaker will talk more about the secrets analysis. So before we're going to start, so I would like to brief about the housekeeping rules for today's seminar. So the first one is this webinar will be recorded from the beginning, and we will send you the recording right after this session. The second one is you will be muted during this webinar session, but if you have any question, you may ask us at the end of the session. So we'll have about 50 minutes of the Q&A session. So you may turn on your microphone to ask any question which is within today's topics. The third one is if you feel shy to ask, so feel free to drop the message to us in the chat box. So our assistant and myself also, we are happy to assist you. And our speaker will answer your question in the Q&A session. So we'll keep all the Q&A session at the end of the seminar, which is after the team meeting talks. So without further ado, so let's get started with our first speaker, Mr. AdrianYeo. Adrian is my boss, and he is the founder of AdrianYeo PLT. And he has about 30 years of experience of profession audits and tax advisor as well. For our company, AdrianYeo PLT, we have about 100 staff, and we are handling about 2,000 SME clients in Malaysia. So without further ado, let's welcome Adrian. So yeah.
Okay, thanks, Cindy. Cindy, how do I go scroll the slide? Okay, very good morning. I'm going to spend about 20 minutes covering about taxes that have impact to financing. So I'm going to talk about the size of business, business venture, funding of business, tax and financing, proof of tax payment, evaluating performance, proof of fund. Okay. Relating to financing, about business. What is the criteria of business? The choice is, they have a choice, is small, beautiful, or the size really matter. Small is, some people think that small is beautiful, some think size matter. So I think this one is a matter of the brand. How big is your brand? If your brand is big, maybe you think size matter. If your brand is small, your ambition is small, then that small is beautiful. Okay, let's give an illustration of size. The size matter. Let's give an illustration of, say, planting durian. Durian is hot now. Planting a durian, if you plant one tree, can you make a business by planting one durian tree? Or you want to, you choose one football field. One football field, you can plant about 40 trees. That is about 1.3 acres. Or some people want to go for 10 football field, 13 acres. can plant, say, about 400 trees, or some choose to plant on 100 football field, 4,000 trees. There are some listed company or big conglomerate, they might want to plant 10,000. They might want to have 1,000 football size of 1,000 football field, 10,000 football fields to plant more trees. So the more tree that you want to plant, or your ambition to plant more tree, I mean, financing matters because money is always finite. Just drill in a bit on durian. There are two types of plants. There are two types of planters in the marketplace. One is plant 3-5 acres and now go for bigger scale like 50 acres, 100 acres. The one who plant 3-5 acres, unless you are farmer yourself, then you use your own one pair of hands. You do 5 acres. I think it's good enough for the 5 acres with one pair of hands, where you don't really have resources to engage other people to do, and you also don't know how to delegate, or you rather use your own pair of hands to do. Then the 5 acres size of durian orchard is sufficient to take care of one family. But for the investor who go into for 5 acres, then you have this headache, because the 5 acres durian farm, which you plant about, let's say, 200 trees. 200 trees, there's no economic size because one worker can work on 10 acres of land. So when you own a 5 acres durian farm, you need 2 workers. Because why? Because one worker don't like to work alone. So they need partners. So you need to employ 2 workers. Then most of the workers are not Chinese. Now you get foreign worker like Myanmar. Then you need a Chinese supervisor to oversee the operation. So I mean, you get 3 persons to work on the 5-acre land, whereby this 5-acre land, this 3 persons actually can work on the 20 to 30 acres land. So you don't really have this economic size. So when you have this economic size, then the business venture become most of the time a failure. So in business, whereby if you are investor in a business, size really matter. Too small, you can't do. Just like David, if David were to start a business by going pisang, only operate one store with turnover of 200 ringgit, so he cannot venture in this business. Because why? Because this is cash business. You don't have internal control on this. For a business, to call it a business, you must have the full set of business mechanism. You must have the people working down under do the manual work. Then you have the supervisors, you have the account, you have the internal control, you have the marketing order. So you need the whole host of people to make it into a team. If not, unless you are sole proprietor, you do everything yourself. But you start to have a small team, you're going to fail. Because a small team is not a complete team. So in business, for the listener, most of you are SME owners, size does matter. So when size matter, then our financial resources is limited. So we need funding. So funding, we need bankers to support us. The bigger business that you do, the more funding you need. Okay, talk about funding. I rank them into the 6 categories. Trade creditors, the supplier are the best funder because normally they don't charge interest. But some we mark up the selling price. But by and large, supplier is a good funder where they can give us 1 to 3 months of credit. Then the second one is the retained profit from the business that you can do the expansion from the business, but provided your business is profitable. The third, bank facilities. Bank facilities, if they don't need you to give them collateral, just business performance, the director give guarantee, then this one is the third choice. Then the fourth choice is like public bank. Public bank always want collateral. So when you give public bank the collateral like your factory or your shop lot, then they look into your business operation, whereby if your business can churn out the cash flow to meet the loan repayment, then plus the director name is clear in the credit rating, then a public bank, Hong Leong orders, most likely will give you that loan, but plus director guarantor and the property as collateral. Another facilities, bank facility is you can give a third party charge for financing to your business by giving, let's say, your house as a collateral plus director guarantee. Sometimes this house as a guarantor sometimes is a good thing, because if you go for a business loan, pure business loan, the bank might charge you BLR plus 1.5 plus 2. Those are expensive loans. They're amounting to about 7%. But if your house, you go and top up, the bank interest is about 3%. Also, there's an option for you to give personal property like shop lot, factory, house with a lower interest around 3% as collateral for your business loan. Of course, the bank would like you to give title guarantee also. Then the title need to be clean as well in the credit rating. Then the number 6 choice is a director or shareholder put in their own money as advances, not pay up share capital, because advances is better. The money is not committed. As and when the company got loan, got cash, you can always demand for your advances from the company. Then the number 7 is pay up share capital. This money is committed. Once you put in, you cannot take out unless you go for share reduction. That's costly. So the money that you put in, be careful. If not necessary, don't convert them into share capital unless the bank demand for it. They want to show some gearing, that you need to commit some capital before they can give you some additional loans. The last one is family loan, family members. This one, try to avoid family members loan or friendly loans, because this sort of loans, you forever owe the person gratitude. Try to avoid if you can. Proof of payment. Proof for business. If you don't pay tax, that means your business is not very good. So healthy cash flow. So the proof of business ability is the business must have healthy cash flow, good profit, and pay decent amount of taxes. The bank will always verify your ability by whether your business can generate the cash. This also depends on the size of your tax payment and the proof of payment. That means the more tax, the amount of tax that you pay is in relation to your profits. So the more tax you pay, the more credit that you have. This one is an illustration on the business performance. Assuming here I just have a brief, put up some brief numbers. If you have sales of 5 million, then your profit before tax, before interest, before depreciation is 600,000. Then after tax, after depreciation, those profit is 200,000. Then yeah, this fixed asset 2.5 million, trade debtors 1 million, bank and cash 300,000. Then your creditors 300,000, bank overdraft 500,000, director loan 2 million. Then your shareholder fund is 1 million. Your share capital of 100,000, return profit of 900. So this sort of performance, is it good performance? So you make about 4% net profit margin, Then the business is mainly funded by the directors, because the director loan is 2 million. The pay up is 100,000. Retained profit 900. So they mean the director funding 2.1 million with the retained profit of 900,000. So I mean the funding is about 900. I mean 2.1 million plus 900,000, so it's 3 million from the shareholder fund. 3 million. 3 million is a typical business performance. David, in this case, in this sort of balance sheet, normally from the banker perspective, how much you think the bank can grant, consider loan for this sort of operation? David? Yeah. David, is that?
Yeah, can you hear me now?
Yeah.
Okay. Actually, if you ask me, based on this kind of performance, the bank normally, when they give a loan, they will first look at your turnover, which is your sales, 5 million. Now, as a rule of thumb, generally they will do about 20% of your turnover, which in this case is about 1 million. That is, again, provided there's enough cash flow to repay. So again, to repay, we'll have to look at your profits. As usual, your EBITDA, actually not profit, sorry, your EBITDA has in your 600,000, whether it's sufficient to sustain a year, and that 600, based on this, I think this customer can qualify a loan of 1 million easily, because his EBITDA at 600,000, I think is enough. Again, some banks will look at EBITDA very strict. Some will look at gearing. For this case, you might have some issues on gearing. So again, a different bank will do, one bank might not do because of gearing. So, but if all the banks think the same, if you ask me, yes, it will qualify 1 million loan. Yes, the EBITDA is enough to pay the loan. And basically, if gearing is not an issue, this bank will lend. If gearing is an issue, this bank might reduce, because different bank, different criteria.
Okay, thank you, David. And by the way, David was a former country head for CIMB and NBank on SME. So after my session, David will tell you more about the banking side. Thanks, David. So with this sort of financing, even though the director have money to put in, but this business will most likely to get about 1 million to maximum 1.5 of loans. But the director put in their own money. So this sort of the funding structure is set. So the director loan or shareholder loan is 2 million. Share capital is 100,000. So total is 2.1 million. So lately we have client income tax. Lately have been working hard over the past 3-4 years. They always ask the capital statement of directors or shareholders, where you get your money from. So in this case, the Inland Revenue will ask for proof of fund. If they were to ask you where your money come from, can you sleep? Can you explain where is your source of 2.1 million? So you can't sleep well. That means most likely you're stung by the effect of shortfall in your income tax payment. That means you have been stingy in your payment, that resulting in the inquiry. Because when income tax, when they see big numbers, they have all our tax information, the income reporting information. They can do a simple check straight away, and the system will throw out something that's a mismatch in your income, in your income against your funding. Just for your information, we as a tax agent, we key in. You don't know what we have done, because in the tax system, before you submit your tax return, we have to key in your balance sheet information into the income tax system. So we have to key in the shareholders, how many shares you have, the director loan, shareholder loan, name, IC, and address. So the income tax system, by keying your IC number, they'll pull out a list of, let's say, 10 companies. All the 10 company information will be shown in the list. Then with the submission, then they know in total, on top of this 2.1 million, you another 5 companies add up to be total about 10 million. Then you have to explain where you get your 10 million from. Not only this 2.1. This 2.1 is part of the 10 million. Just be mindful of how other mechanisms work, like Sun Tzu Art of War said, know yourself and know your enemy. 知己知彼，百战不殆. So you must know about yourself and know what Inland Revenue know about you. So here, the conclusion is, for financing, the business is a testimony of your ability to earn. If your business is good, then your profit is high. If your income is high, your ability is strong. Your financial ability to bring back food to your family. Now, income tax, the tax payment is cross-checking to your business performance. Your business show that you make 10 million. So income tax, we want to know whether did you make the tax payment. If you cannot make the tax payment, that means it casts a big doubt on do you really make the 10 million profits? So that the tax payment also a cross-reference to your character. Let's say a person worth 100 million, but never don't have an income tax form. So I mean, it casts doubts to your financial creditability. That means you are not a good citizen. So not a good citizen, that means you cannot, if you are not a good citizen, that means your character is in doubt as well. So financing, a banker, to me, they're the best business partner for expansion of our business. Avoid a loan, because banker, if you default, they don't throw red pens on your door. With that, I conclude my presentation. I'll take questions and answers at the end of the session. But anybody have doubts, any have questions, you can key into the chat box. I pass over to Cindy to introduce David Yeo, our next speaker. Thank you very much.
Okay, thank you, Adrian, for the wonderful sharing of the business performance and the income tax matters. So let's get started with our second speaker, Mr. David Yeo. I'm not sure whether they are the same surname or not, because both are Yeo, but it's just different spelling. Yeah, David and AdrianYeo. And David is the certified credit professional, and he was formerly worked as the country head of the CIMB and the M Bank. And David has also have the experience of more than 30 years experience in the banking. And he held various leading roles in a few top local banks. Without further ado, so let's welcome David. Thanks. Yeah, David, you need to share the screen and we can't hear you.
Okay, morning everyone. Everyone can hear me, I hope.
Yes, yes, can hear.
Okay, Good. I think before I begin, I just want to thank everyone for spending the time this morning to come for this webinar to learn a bit more on a few things that we are sharing. Okay, before I go into the thing proper, I probably want to share a little bit on what's happening in the country now. I think everyone knows there's a new variant now. So everyone expected we to enter endemic stage, of which now I think the endemic stage is delayed. So with this, probably a lot of businesses now are very uncertain on what to do. Now, basically, should I expand? Should I sustain? Or should I close? You know, because if we do not enter endemic, there is a possibility of an MCO coming again. We do not know, right? So this uncertainty is going to hit a lot of SMEs, especially the smaller SMEs, right? Now, I think what Adrian shared was very good. I think he's very, very clear that now for I think I'm looking at this SMEs as in mid and maybe slightly below mid SMEs here, not the big conglomerates, the listed companies. Now, basically, for a business to sustain, there are only 3 ways that you need to do. But basic thing is cash flow must be there, correct? Now, how to raise cash flow? Like what Adrian said is true. You can actually pump in money yourself. Now, if you pump in money yourself, your money, is it legit has the tax been paid? And if not, the tax fellow will come and ask you where your money got from. Now, if you're worried about that, then the other option is you bring in a new shareholder. Now, the problem is when you bring in a new shareholder, you surrender a certain portion of your business to the new shareholder. Now, is that a way you want? So if not, the third way to increase cash flow in your company is you stretch your creditors. Again, when you stretch your creditors, Adrian was clear. How long can you stretch? 2 months, 3 months? Because if you stretch longer, they will stop supply. If they stop supply, your business stops, right? So then comes to the last part. You do not want to explore the first 3 options. The last part is, you ask me, is the best part, which is a bank loan. In other words, you go for a bank loan. Now, bank loans nowadays, most of the banks are doing a lot of working capital, except for 1 or 2 banks that Adrian mentioned. Public bank is going more on collateral, whereas most of the banks do not ask for collateral. Luckily, the government has come in to help. They have given moratoriums, and they have come up with a few funds, of which I will share one very special fund afterwards, where the rates are only about 3.5%, and all the perks that comes with it. Okay, let me go straight to the slides. Now, the first slide. Now, I think what I'm going to share today is actually only three things now. Key common reasons why bank loans are rejected. Now, I want to tell everyone that different banks.
Sorry, David.
Sorry.
You haven't shared the screen yet.
Oh. Hold on, I'll share the screen now. Hold on,
Able to see?
Can you all see now?
Yes.
Now, okay?
Not yet.
I mean, yeah, I think there's a delay. Is it? Can you see the screen?
Yes.
Okay, now, okay, I can see the screen, right? Key common reasons, you all can see that, right? Can I continue?
Yes, can see already. Okay.
All right. Since you all can see, good. So again, there are 3 reasons why banks are rejected. The common key valuation criteria. Now, what I'm going to share is what banks generally will look at. Generally, I will look at when they process loans. Okay, so.
I think, David, you can continue because I have already shared your screen at my end. Yeah, so this is the screen. Yes.
So this is the next screen, is the purpose of financing, right?
Yes, common reason.
Okay. The next one is the purpose of financing. Okay, right. Now, banks, when they look for loan application, they look at basically 4 things. The first 3 things: purpose, financial viability, and financing structure. These are basic things that the bank will look at. First thing is, when you go to a bank, first thing they ask you, what's the purpose? It's either working capital or you want the bank to finance your purchase of property, right? Then the next thing is, they will look at how are you going to pay this, whether it's working capital or asset financing. They will look at your profits and look at your track record and decide whether you can pay this or not. In other words, if they feel that your financing is viable, then they will lend you. Then the next thing they come to you is your structure, where they will ask you, well, you need a short-term loan, long-term loan, working capital, or what? No. Basically, when you talk about working capital, is generally short-term. Short-term as in, it can range from 1 year, anytime from 1 year to 7 years. Because now most of the banks now actually do for 7 years. But the last part where they talk about decide whether to eventually give you the loan or not, they will look at 5 things here, which is the basic things of credit: character, collateral, capacity, and market condition.
Next slide.
Next slide, please. Okay. Now, the key thing here, if you ask me, one of the key things the bank will look at is your character. Okay. Now, what is character? Well, if you ask me, character is basically about your track record, your ability, your willingness to repay. You know, very key. I think a lot of banks always stress that yes, your profits are strong, your business is good, but some people tend to like to delay repayment because of their habits. You know, so this is something that if the bank feels that your character is in doubt, the bank will lend you. Then next thing, of course, it comes to capacity. Capacity is about your profits you generate, the cash flow you generate, and how much of it can be used to repay the loan. Again, it differs from bank to bank, because some banks, when they look at capacity, they look at your profits, your EBITDA, to decide whether to give you the loan or not. Some banks don't look at your EBITDA, they look at your bank statements. You know what I mean? So different banks have different criteria. But one thing that they cannot run away from is everything comes back to character, your track record. Have you been in the business for 5 years, 2 years? Again, the bank differs here. Some bank do condition is minimum, you must be 3 years in business. Anything below 3 years, they will not do. But there are some banks do startups, means within a year they will do. Some insist on 2 years. Like I say, again, different bank, different way of evaluating your loan. The third thing, capital. Again here, now capital, like what Adrian say, is about what you put in as against how much you borrow. The magic word all the banks uses, gearing. Again, gearing is an issue in every bank. Some bank says, you put in $1, I will lend you 5. That means they can take 5 times. Some banks 3 times. That means to say, if you put in $1 in your capital, I can only lend you $3. So again, different bank, different criteria. So for you to decide to go to a bank, you really need to understand what the bank look for. You know, whether the gearing is 5 times, 3 times, or 2 times. And of course, the fourth thing, which is security. Now, security, one bank in the country always look at security. I think you all know which bank. I don't want to mention that. I think Adrian was very clear when he said about security. That banks, if without security, he will not even lend you a single cent. Okay. The last part, condition. Now, this is thing again differ from depending on the bank. Some banks now stay away from oil and gas. In fact, you ask me, most banks stay away from oil and gas. All right. And some banks also stay away from recycle business. Now, let me ask you about recycle business. Is the profit good? If you ask my experience tells me the profit margin of a recycle company is very good, but banks don't lend because they want to stay away from it. But there are some banks that does that as well. And the latest one, construction. Some, now most banks don't do construction loans because they feel that construction is very risky. But they fail to understand without construction, the SME or the country economy cannot grow, if you ask me. Next slide, please. Next slide, please. Next slide. Okay, back to the common reasons of financing rejection. Again, long story short is they look at track record, weak credit, lack of commitment. Some banks are also very particular about business succession. The moment you touch 60 years old, they say, look, you have to bring in someone younger. But they fail to understand one of the strongest bank in the country have directors that are 70 to 80 years old, public bank. But when they lend to you, they say, oh, no, you have to bring in someone younger because you're already 65. Then the next thing, weak management. Some banks don't bother much about management. Some banks very particular. They insist that, oh, the management must be qualified, must have university accreditation. But you ask me, most of those SMEs out there now, don't talk about the Gen Y, are all seasoned people who actually, if you ask me, talking about their qualification, they don't have, but they're very good at doing business. But then again, it all depends on how you convince the bank. This thing, adverse credit checks. This is one thing very important for the banks. Now, CCRIS. Now, again, CCRIS means, some of you are not clear what a CCRIS is. CCRIS is your track record of repayment. Every bank can see this. This is run by Bank Negara. That means the moment you default or delay in any of your loans from the banks, the bank can see that you're OD for 1 month, 2 months, and 3 months. The question comes against is this: when the banks decide to lend, some banks, they see your one of the facilities is OD by 1 month. They still say 1 month is okay. They will still lend you. But some banks insist that none, you must have not any overdue. Some banks can take their risk appetite higher. They take 2 overdues. They still lend you because they feel that 2 is not crucial. But the moment you touch 3, which is considered very taboo to the banks, 3 means it's non-performing. Most banks will not lend. So back to the story is, some banks will lend when you have 1 overdue. Some banks will still lend when you have 2. But all banks will not lend when you touch 3. Okay? So I think for SMEs, this is very crucial. Your car loan, your business loans, try not to be overdue in your payment. Now, how do you know where to check this? Now, there's this experience afterwards that's coming out. He will share you with a slide. This company has access to CCRIS. Now, most SMEs can use this CCRIS to do 2 things now. Not only check your record now. Actually, if you're a business and you are in a business where you want to close a very big deal now, it's best that you do a search on the company before you decide to work with this company or not. Because a lot of things you can see, the company afterwards will share with you what you can see in the other businesses, basically. So next thing is D-checks. That means check return. Most banks do not want to see their clients having check returns. So again, some banks, the more you have 1 check return, they will reject the loan. Unfavorable industry outlook. Again, this is back to different bank having different appetite for different industries. Again, oil and gas, I want to quote only 3 industries: oil and gas, recycle, and construction. One bank will do 1, the other bank will not do it, but one bank will do 3. Different banks, again, they look at it differently. So next thing is about your inappropriate facility, where they look at your sales turn. Again, how much would a bank lend you as against your business sales? Again, different bank, different criteria. Some banks can give you 30% of the turnover. Some banks will only do 20%. Some banks do actual working capital to decide whether you can lend or not. So again, the thing comes from the fact that different banks have different criteria. But the last part, of course, when you reject a loan, is incomplete submission. This one is standardized to all banks. But again, when it comes to documents, different banks again have different criteria. Some banks insist that the companies pay their tax on time, cannot be payable in the financials, must be paid. But some banks take payable. That means to say you owe income tax and you allow time to pay, right? Again, different banks, different criteria. So guys, if you really ask me, you really have to just find the right bank that fits your your business needs in a way to decide. Okay, next slide, please. Okay, I'm going to share with you this fund. This fund called Targeted Relief Recovery Fund is a fund that has been given by the government to help the SME to survive this pandemic, right? Because the rate for this fund is very cheap. The application is also a bit more lenient because it is actually funds from the government given to the banks to be given to SMEs at a rate of 3.5%. Next slide, please. Okay, this is how to qualify for these funds. Okay, all the SMEs must be Malaysian owned. That means minimum 51%. Okay, except for tourism-related subsectors, they will not lend. Besides that, all SMEs are eligible. Of course, the criteria again will be back to the bank's evaluation. What I'm sharing with you is the generics of the facility in the sense that this for working capital, maximum per SME 500,000, and of course the beauty of this is the rate 3.5% per annum, and it's clean, is collateral free, no collateral, and the rate is 3.5. Like what Adrian shared, if you want to have such rates, the only way you can get from the banks is you have to surrender your property for them to hold as collateral before they even consider giving you any rate below 5%. This is very special because this is again government funded, and these funds are still available until December this month, and I think it will still be available in January and February because the government recently has announced additional funds for this. So I think there are some accountants here and some secretaries here. I think you should share this with your customers. I think those days SMEs borrow to grow, right? During such time, it's not about borrowing to grow. You ask me, it's borrowing to sustain. To sustain is about cash flow. And what can give you cash flow besides pumping in additional capital is to get a loan from the bank. Because whatever the loan you take is immediate cash flow and you repay it over 7 years. Now, we do not know what's going to happen next year or year after. And now with the new strain, things could get worse. So it's time to prepare to actually bring in a loan to sustain your business. Unless, of course, you get your own money you bring in or you bring a new shareholder. Like I just explained to you, a new shareholder means you surrender a portion of your business. But when you get a loan from the bank at 3.5% for the next 7 years, is immediate cash flow for you to sustain. You ask me, is to survive for the next year or so. Because, guys, I think you all know inflation has come in. Why inflation? Why inflation has come in is because I think the supply chain has been disrupted. Basically, there's over demand now and things cannot sustain. And the other thing about this fund is there's a moratorium that comes with it. That means to say the moment this fund is dispersed to the SME, depending on the bank, again, depending on the bank, some banks give you 6 months moratorium. Some banks give you 12 months. Now, what is 6? What is 12? What is moratorium? Moratorium means they disperse 500,000 to you, and the next 6 months you don't have to pay because the government believes that you need time to sustain. Some banks give you 12 months. That is another good thing about these funds. So my recommendation is if you are doing business and with such thing happening, I think it's time you prepare yourself for bad times. It's always better to prepare now because once you delay and let's say you are having cash flow constraints and you start defaulting or delaying on your installments, the banks will not lend you already. Okay, I think that's about all. So we have the next speaker, right? And we take questions at the end of this seminar. Thank you.
Yeah, thank you. Hi, thank you. Now our third speaker is Timothy Wong. So Timothy has over 19 years of experience and he has diverse experience in information business, credit bureau, and data analysis. And now Timothy is now with the experience, which is on the secrets. So looking forward for Timothy to share with us more details about the secrets data. So let's welcome Timothy.
Thank you, Cindy.
Yeah.
Can you hear me?
Yes, can.
All right. Thank you for inviting Experian, especially to give a short briefing on what can Experian do for all the SMI and SME. So first of all, I would like to just introduce just to say who is Experian actually. Is my slide on?
No, we can't see your slide. Can you just share your slide here?
Actually, my slide is without.
Your slide is without slides.
Okay, because I'm using a client, so that's a client.
Wait, let me try to share.
Right. Thanks.
Yes, hold on. Are you able to see the slide now?
Yeah.
Okay. So can I?
You need to enlarge the slide. Yeah.
Good now? Not yet enlarged. I
Yeah.
thought. Hold on now. So, Cindy, you're unable to share because I try to enlarge, but
If you don't have the slide.
You can go back to the slide and just use slideshow. It at the very bottom of your right hand side.
Correct.
Yeah, just.
still cannot.
Yeah, you just close this one.
Close this one.
Yeah, close this one. So you open this time you open the slide is correct. The slideshow is at the right bottom of your right hand. Sorry guys, I won't able to share my slide because the slide is in my company laptop and I'm using my personal laptop because the company laptop doesn't persist to register with Zoom.
I think we can just view the slide, but it's just that slightly small.
I think it should
yeah.
be
If participant don't mind, then we may proceed with this.
We'll do. I just go to the second slide. Then we.
Yeah.
Okay. Just give me an introduction on who is Experian. Actually, Experian last time was known by before Experian bought over us way back in October 2019. We was called RAMC or RAM Credit Information Singapore, which RAM Credit Information the database is actually way back from 1985 until now. So we collect data from way back from 1985 until now. So we have a database of what do you call it, all this information, observed information as well as good information. So Experian bought over us on 2019, and from December 7, 2019, RAMC was rebranded to Experian, so that we will get now we are known as Experian. So for those that be asking, who is Experian? We never heard of them. Actually, Experian Information Services in Malaysia right now was previously known as RAM Credit Information. Okay, Go to next slide. And Experian is also an certified ISO 27001, which is we are information technology security technique and information security management system that require us to register to safeguard all the information that we kept in our database. So we are certified under ISO 27001, and this also helped us a lot in the sense that when the secret was down and it was taken over by all the CRA have revoked all the access to that. We managed to get it back earlier, in the sense that because of we are one of the ISO 2001 certified under the security management. Okay, so I'm not going to touch much on secrets and that, because I think David have done that. So I will go more on what they call it, this what are non-banking data, or I fall back to what David had said just now, which is the 5C. The most important one would be the character. A character of a company or SME determine either the subject concern available for getting the loans or not. So in secrets, which is from Bank Negara, they have banking data. So they might pay the bank well, but how about what do you call it, non-banking? So in our side here, what we have is what they call it, this non-banking data, which we already developed under trade reference. So as you can see here that when we talk about CRA, credit reference agency, a lot have a perception saying that well, credit reference agency means blacklist. So we would like to change that perception in the sense that we don't only collect bad data, we do also collect good data as well. In the sense that we got about 400,000 what they call it, accounts and also financial that we gather from our client, which is their agent list, that they share the payment pattern of the client. So as you can see that from our sample report there, that what we have done is we collect all this information and we put it into our system so that you all can reference how is this customer paying their supplier. Doesn't mean that this information will all have all bad information. So we are trying also to tell that if let's say your customer is good, we also should share their information. Their good information means their good payment behavior. So from that payment behavior, you also can tell that subject concern have, let's say in this case, you got 5 suppliers from various industry, and how much credit term, what credit term they are having, 120 days, and how many percent they are paying in time. This also will help to evaluate your potential client. And if let's say you are sharing their good information, means they have been paying you all well, it might also help to add point to the scoring when banks are looking into their data before approving any loans. So in the other way is you are helping your client to get plus point in his scoring so that he can or they can get loans so they can expand their business. Means if your customer expand their business, you as supplier, you gain them also. So that is what we are trying to do here in Experian. Not only putting in all those bad data, blacklisting. No, we are trying to also help SME in the sense that you all, if let's say you all share information of not only on bad but also on good information of your client, it might help your client to expand in the sense that they can get more credit facility, or is a plus one for their score to get loans. So being said so, in experience, we have each and every report on company or SME, there will be IDTC. IDTC actually is an industry debt turn cash. This is where we all come up with the data in the sense that we will know from all the data from 400 over 1,000 payment record that we receive from our client by industry. We were able to know that subject in this industry, let's say construction, when they extend up their credit, how long that they can get back their what they call it, the money means, and how long after the credit term that they will get back their loans. So this is all based on what they call it, analysis that we get from payment record that has been sent to us by our customer monthly. Every month they will update their aging list to us, and for those that would like to know, because not only on the risk of the industry or the risk of giving up credit, it also will give you an idea that how long or how to set a credit terms, a guideline for you to set a credit terms on certain industry. So on this also, I do share on the industry that we all have, that we already done the what they call it, IDTC, and this is based on the current record. So the next slide. So this is IDTC by industry, means industry debt turn cash. You can see construction will be the highest one, and IDTC will change according to the record that we receive. So if let's say this month, this quarter, the construction will be the highest, 94 days. It means the IDTC is 94 days. Doesn't mean that it will stay there. When the payment get better, and what do you call it? They get back their loan within a certain time, the IDTC day will drop, or it will increase. So I think that will be the sharing from our side here. Actually, this is what we call non-banking data, which I think banks have their secrets. Why don't you all SME, SME outside there have your own secrets? This has been built for all this industry. You all can share information. You all can check information within your same industry. So, like this, like I will say, David has been saying that character is most important, number one in his chart. The payment pattern of the subject concern that you are going to give can be determined from our trade reference record. So I think that will be what I'm going to share for today. I will take question if there's any. Back to you then, Cindy.
Yeah, thanks a lot for the opportunity. Thank you for all our three speakers for today for their wonderful sharing for today's topic. So let's open the Q&A sessions to the floor. There are two questions. Okay, the question one, I think, is more related to ask about the bank loans. This maybe let's David to take up these questions. So the question asked is, may I know how much is the TRRF fund has been allocated? And so far, how many % has been used up?
Okay, the TRF actually came in a few tranches, all right? If you really ask me for the specific of it, I can't really remember, but the latest tranche was 1 billion, okay? And I think close to about 400 million to 500 million has been utilized. There's still a few hundred million out there with the banks. Now, these funds are allocated to all the banks at a different quantum. Some banks have 100 million, some banks have 200 million, some banks have 300 million, depending on the size of the bank. Of course, I think it has been exhausted, but once the bank exhausts, they're going to apply to the government to get again. So one of the banks that I know has been exhausted, I think is Maybank. But the rest of the banks, there are still allocation there.
Okay, all right, thank you. So the next question is, if our clients interested to apply for this loan, so how can we go about it? And then what are basically the supporting documents are required?
Like I say, well, standard documents are basically all your business registration, SSM, and all those things. But certain banks, like I say, have different criteria. For instance, I give you an example. Like one of our second largest bank in Malaysia, CIMB, right? They insist on Borang B for 3 years. They insist that you pay your taxes in for all 3 years. So again, very difficult to tell you now. But if they're really interested, maybe they can contact you. Shirley, is it?
Okay, Cindy.
Cindy, maybe they can contact you, and then you can pass the thing. I can always assist to identify the bank for them.
Okay,
you know what I mean?
Sure. I believe this loan will help our clients a lot. Yeah. Especially this one.
Yeah, it's good actually for all those accountants that are and secretaries now. Actually, it's time that you tell them about these funds and tell them that they should avail it because it's very cheap and it's a moratorium, to sustain for the next 7 years.
Okay. But can you explain more about the moratorium? Just now you're saying about 6 months and 12 months.
The moratorium is like this. Assuming you qualify for 300,000, okay? They disperse 300,000 to the customer straight away. Then for the next, depending on the bank, for the next 6 months, you do not have to pay installment because it's a 7-year loan tenor thing. So first 6 months, no installment. You start paying installment on the 8 months. For another bank that does 12 months, so for the next year, the next 12 months, you don't have to pay any installment, You only start paying on the 13th month, the installment, until the 7th year. That is the difference.
Okay. That means the longest tenure of the loan is 7 years.
7 years, yes, 7 years is the tenure. Basically, 300,000 you divide by, 84 months, and you twice the rate. You're talking about a few $1,000s only a month. But again, you get a payment holiday. A moratorium is a payment holiday. This is because it's government funds. Banks cannot afford this because this is not in their banks are there to make profits, right?
Okay. All right, thanks. Any question from the floor? You may unmute your microphone and ask us, or you may key in our chat box. Yeah. So if not, so we will end our session for today. So for those who are interested to apply for the bank loan, so welcome to contact us for further inquiries. Maybe we can assist you on your company financing. So thanks to all the speakers and thanks for your participation. So hope to see you again in next time. Bye-bye.
Bye, thank you.
Bye, thank you. Thanks, Timothy. Thanks, David. Yeah.
Thanks, everyone. Thanks, David.
See you, Timothy.
Yeah, see you.
Bye-bye.
Bye.
The session end already, is it?
Yeah.